Hi there, I'm Julie Tam, managing broker of LYN Realty in Houston, and you're watching Smarter Real Estate Weekly on Wednesdays. Thank you so much for joining me today as we talk about skyrocketing insurance premiums and what to do about it, including advice from the insurance experts, which would not be me. So here's a disclaimer. Again, I'm a licensed real estate broker in the state of Texas. I am not in the insurance business, but I'm going to give you advice straight from the source, the insurance carriers that have given us advice and their clients in general. And so things that you can put into practice. But the most important thing is that you should talk to your own insurance carrier. You may have an insurance broker, you may have insurance through multiple companies. And so talk to those people, talk to the professionals, get their take on it, get some different opinions, and, see what you think. But anyway, let me go ahead and start with the problem. Then I'm going to go into some anecdotes of things that we have experienced because our company manages more than 300 rental homes for landlord clients, including ourselves. So we own a number of rental properties or investment properties as well. These would be residential. So everything from a single family freestanding house to a townhome, which would be multi-story, to a condo that would be in either a kind of an apartment complex style or a mid-rise or a high-rise, and then also duplexes, triplexes, and quadplexes. So those are 2 units attached, 3 units attached, or 4 units attached. We don't manage anything larger than that because any more units than that would actually be considered a commercial property, and we are managing residential only at this time. Okay, and so I'm going to also tell you what we are doing in response to help our landlords and ourselves, and then give you advice finally from an insurance broker that we use to see what you should do about this, because this is becoming really a big problem in the entire country. You know, we had the COVID-19 pandemic, and now we have an insurance pandemic, essentially, or an epidemic of just rising premiums. We saw rising premiums, of course, we've seen that mostly all along, but, a few years ago, right now we're at the beginning of 2024, but over this past year, especially, we've really seen premiums go up in an extremely alarming rate. And that is not an understatement or an overstatement. That is not an exaggeration. Okay, so the problem mainly stemmed from, as we've heard on the news and from the experts in the insurance industry, is natural disasters. We've had worse natural disasters, especially in coastal states like Texas and California and New York and Florida, where in a lot of these places we're getting flooding. California has wildfires here in Texas and also in Florida. And in some cases in New York, we have, the major rainstorm events, right? Tropical storms, hurricanes, just major rains that cause a lot of flooding. And so because of that, the costs have gone up for insurance companies, because when you have these natural disasters and people have been paying claims or paying premiums, now these insurance companies have to pay out claims. And so it's just bad for them. So they have to increase their premiums that we as the customers are paying. Also, the cost for repairs and rebuilding of homes has gone up, with the cost of raw materials and labor having gone up over time. Okay, so not only are individual homeowners affected, but also homeowners associations of buildings. Okay, so when you have a single family home, typically the HOA doesn't pay insurance on any part of your property. You are insuring your entire house. But when you live in a condo within a building, for example, then the exterior of the building and the common areas like lobbies and mail rooms and fitness centers and the swimming pool, those are being insured by the condo association or the homeowners association. And so when their costs are going up, guess who they're going to pass those on to? Well, also to the homeowner. So we're getting doubly hit. We're getting hit for the individual unit, the condo itself. So everything from the walls in. So if you look at, the sheetrock behind, I'm sitting in my own home. Out here, we're insuring all this if this were a condo. I'm in a single family home, so we insure everything. But in a condo, you'd be insuring walls and then out into the living spaces. And then the condo, usually the association will insure things that are behind the walls. So like the plumbing and the electrical stuff, the insulation, all the materials that are back there that you cannot see, from that all the way to the exterior. So the exterior facade, whether it be the brick or the siding or the stucco, whatever material is on the outside. And then the roof often is insured by them as well. Exterior doors and windows may also be covered under the homeowners association's insurance. So they will tend to raise your monthly and or annual maintenance fees, whatever you happen to have, or you'll even get tacked on a special assessment. So a one-time extra dollar amount, whether it be in the hundreds or even the thousands, that all the homeowners have to pay in order to help the HOA recoup those costs. Something else we are seeing is that insurance carriers, in some cases, they have stopped insuring certain types of properties. They have also pulled out of entire markets. So out of, say, for example, the Harris County market, which is where Houston is located in, or out of an entire state like Texas or California. So very scary stuff, and it can just leave you wondering, what do I do? There's been talk of the federal government taking over at least part of, or potentially in the future, all of the insurance market, like FEMA already has. Our federal emergency management folks, they provide flood insurance. Okay, so you buy flood insurance through FEMA. So insurance on everything else of the property, perhaps could become a FEMA or other, branch of the federal government kind of thing. Okay, so to give you an idea, we own a single family house that we rent out. This is the one example where the insurance premium went up year over year from the $2,000 plus range for an annual premium to 3,000 plus. Okay, that's already really alarming. You're talking about a 50% increase, okay, roughly. But the alternative, when I asked our insurance broker to please shop around and see what other carriers are offering, well, the next cheapest option was over $9,000 a year. So of course we had to go with the $3,000 something. And then that's also an opportunity where you may find different options to get the premium discounted, but you're going to have to sacrifice a little bit. You don't just get to discount, you lose some coverage. So I'll talk about that a little bit later in terms of other options that you might have. And to give you a taste of it, you may need to decide that, well, I want to decrease, say, the dwelling coverage, right? The insurance company is going to value your dwelling at a certain estimated cost, whatever they think it might cost to rebuild in the current climate and the current economy in the market. And you may say, well, you know what, I'm going to just take a little bit less coverage and I'll just pay more out of pocket if I need to. Or if I feel like it probably won't cost that much based on my knowledge in real estate, then I can go ahead and lower that. A lot of times, though, they will not let you lower it below what your current dwelling amount is. So let's say your dwelling is being estimated at $200,000, right? That you've been paying the premium based on for the past year. So they'll let you stay at that rate, but they're not going to let you go back to like a previous year or even lower amount. Okay. There is a condo, an investment condo that we own. Here's another example. We actually own two of them in the same community, same community. Well, one of them has come up for renewal on the insurance, and the carrier is pulling out of Texas entirely. So we got a letter saying, sorry, once your premium or once your policy expires, we're no longer insuring your property because we're not going to be working in Texas at all. So we were like, okay, well, now we got to shop around. Fortunately, there was one other carrier that is a major name. I'm not naming any names in this video, but anyway, they are insuring our property at a reasonable price. Surprise, surprise. Okay, want to talk about several years ago, actually, this type of trend already started. So because we already have had some major record-setting flood type and storm events, right? Had Hurricane Harvey in 2017, and in the couple years prior to that, we had some other record-setting storms in Houston. So like Tax Day flood, Memorial Day flood. And so there was one major national insurance company, one of the most famous insurance companies, that they actually stopped insuring single family rental homes in Harris County. So if you have a freestanding home that has the risk of damage to the exterior, like wood, for example, I mean, not wood, the roof, for example. I'm having pregnancy brain, folks. I'm over 8 months pregnant right now. So yes, the roof could sustain hail damage or wind damage, some sort of storm damage. And so therefore the insurance company is shouldering a bigger part of the burden to insure a single family home for me as an owner if I'm buying a condo insurance policy, that insurance company doesn't have to insure the roof because the roof is already being insured by the homeowners association. The roof is going to be over multiple units, right? The roof may be on the second or third floor, and then you've got units on the third, second, first floor. And so that is the burden of whatever insurance company is insuring for the condo association. And so the insurance company insuring for my individual unit isn't worried about that. So they were continuing to insure condos that are rental properties, but not single family homes being used as rental properties. And now, literally, right as we were moving out of our previous home, a single family home, to this one, that insurance company told us that, you know what, we can insure no more new homesteads. Homestead is the home that you live in, your primary residence. So they were not going to write any more homestead policies. Luckily, we already got them locked in to insure this home that we moved into, because if we were trying to do that, even just a little bit later, it was literally like a few days after we were going to move in here. They stopped, that we wouldn't have even been able to get insurance for this home through this major national carrier that we have been with for many, many years, for decades. Okay, so what are we doing about it as a company at LYN Realty? So we're having to increase rents upon tenant lease renewals to recoup these higher insurance costs and HOA fees in some cases for our landlords. And the trend is going to continue to go up. Rents were already going up during the pandemic. And now with the insurance as another factor, they're just continuing to rise. And even if the market hasn't driven that particular neighborhood to warrant a rent increase, we're already doing it because of the insurance costs alone. Okay, and the final segment I'm going to talk about is advice from this insurance broker, one of them that we use. They sent out a letter with a whole list of things, and I'm going to highlight 4 things in particular. One is you may want to opt to pay higher deductibles. So in other words, if you have a claim, you might want to pay, say, not just 1%, but 2% deductible in order to keep your premium lower. And you just hope and pray that there won't be a catastrophic event where it's going to cost you a lot. The second thing is make sure you check that you're getting all of the discounts that you can get, including bundling. If you stick with one insurance carrier for your home, auto, and then rental properties, if you have other things like an RV or whatever, then do that and get those discounts. And make sure the application that is being completed, a lot of times you're not completing it, it's the insurance agent who's doing it based on information that they're finding online. Sometimes they're using sites like Zillow, which may or may not have the accurate information. And so if they put in the year built and they put in the wrong year and makes your property older than it actually is, well, that's going to cause your premium to be higher. And also if they put in things like, let's say they say that the outside is a frame, like wood construction, well, then that's going to cost more because that's less durable than, say, if they put brick or masonry, some sort of masonry construction that's stronger to withstand storms. So check all those details to make sure everything is correct. Okay, third thing is do not let your policy lapse. Do not make a late payment. Make sure you put on your calendar when you would expect to receive a bill in the mail. So if it gets lost in the mail or a bill by email, if it gets lost in cyberspace, that you can check on it and contact your insurance agent to pay that bill, and do not let it lapse. Any sort of late payment with the policy lapsing, then the insurance carrier could just drop you. Okay, and the final thing is try not to switch insurance companies unless you can gain a big significant savings. Because if you switch, then that loyalty, if you're with a company for, say, less than a couple years, then they're going to be more likely to drop you before they drop a longtime customer who's been paying in premiums for many years. So obviously, if I'm being quoted like $9,000, I can't stick with that company. In this case, example that I gave you earlier, that was to switch companies. But if it was to stay with the same company, then I couldn't be paying $9,000. That'd be a huge cost per year. I'd want to do, okay, let me go from 2,000 something to 3,000 something instead of to 9,000 something. I save 6,000 something dollars. It's worth it to switch because that really eats into my profits as an investor with rental properties if I didn't switch to a company that was charging less. Okay. All right. If you guys have any questions, again, I'm not an insurance professional, so I may or may not be able to answer them for you, but I could potentially point you in the right direction. But certainly general real estate questions, feel free to comment and message. I do get questions from time to time from people who ask me things that are very generic without giving me a lot of facts, and I can't really answer, or they're from another state and so the laws are different. I can't answer. Some of them get really into the legal weeds, and because I'm not an attorney, I cannot answer. So I can only really answer general things that are printed on forms, like this is what the official lease or sales contract says, and this is pertaining to Texas real estate, right? Or even my market, the local Houston area. But yes, would love to hear from you and hope that you will like this video if you found it helpful and subscribe so you don't miss an episode in the future on YouTube. Plus, I also post a link to Facebook and LinkedIn usually. All right, keep watching Smarter Real Estate Weekly on Wednesday so that you can be armed with practical strategies to be a smarter buyer, seller, tenant, or landlord, and come along on my real estate adventures. I'm Julie Tam, managing broker with LYN Realty in Houston, and call us for your real estate needs. Have a good one. Bye-bye.